Okay. Hi, I'm Peter Rose, founder of Longwood Currency Trading. Is your Forex trading costing you $20,000 a year not knowing how to do three simple things? I suspect that it is. I was just on a conference call last week with a person who that's exactly what's happening. We went over the scenarios that they were dealing with, and he's making money. He's a low five-figure bank account holder, trading at reasonable leverage. He's not crazy doing 100 or 200 or 500 to 1 leverage, but he's leaving $20,000 on the table. In taking someone's problem like that and simplifying it is easy for me because I can see the big picture where he couldn't see that big picture. And I presented three concepts to him that we had gone over in our coursework, and we highlighted each one of those and compared it with what he was doing. So if you're a viewer that's just looking for entertainment and the secret sauce, I'm going to list those three things up front, and then you can go watch Mr. Beast or something for entertainment, because the rest of the video isn't entertaining. It's educational. For those of you who have five-figure, low to mid five-figure trading accounts, and you think you're doing okay, or maybe you're just not doing so good, you're struggling with being somewhat consistent, or maybe you're even losing some money, we can improve that by $20,000 relatively quickly by understanding these three simple things. But all I can do is present the three things as what's and kind of arm wave my way around to try to help you to understand how you would implement that. But the when component I can't teach on a video. I have to talk to you, and I have to know what your situation is, as I did with this particular individual. We talked about what he was doing. I have students prepare transaction logs with metrics attached to them, and they send them to me before consulting sessions, and we go over that stuff. And I go, well, did you know you're probably losing $20,000? And you go, I'm not losing $20,000. I'm making, what will accumulate to probably $4,000 or $5,000 on this low five-figure account. I said, yeah, but you should be. You're about 19. According to my calculations, you're about $19,000 behind that. Why is that? Why is that happening? And he thought about it, and we talked about it. He just didn't know, even though it's written in the course book. So those three things are, first of all, you have to know how to create rules. Second, you have to understand the entry analysis process. And third, you have to understand how to execute those rules correctly against valid metrics. So you have to know what those metrics are and all that kind of shit, but that's relatively easy to do. Well, how do you create rules? Well, what's a rule? It's a rule to win a game, or to do better. You have rules in poker, you have rules in soccer, you have rules in everything you do. You have rules when you go to the bathroom. Don't be on the floor. So you have to know how to create the rules for the problem that you're trying to solve, which implies that you understand what that problem is, that you understand how to decompose that problem into solvable pieces that are easily solvable, and each one of those pieces will have one rule with many conditions, not many, but 3 to 8, 3 to 6 conditions to solve that problem. So you have to know how to create those rules with those conditions. That's number one. Number two is understanding the process of entry analysis. As you know, if you've been watching my channel, about 10 years ago or something, I came up with the life cycle of a currency position. I was a software engineer for 33 years, and we used the software development life cycle, the SDLC, to solve complex business applications development problems as a software engineer. And I abstracted the key elements of that software development lifecycle, which is pages and pages of stuff that you got to do, to three simple issues for the currency market. And that's the software The life cycle of a currency position tells you that it has something to do with the currency position, from bid ask to getting out, right? So you've got your entry analysis, you've got position management, and exit methodology. It's simple. You got to know how to enter the thing before you're going to have a position to manage, and you got to have a position to manage before you have anything to exit. So everything depends on that entry analysis that you are maybe saying, oh, I just, when the short MA crosses the long MA, or the Bollinger Band tells me this, or the fibs are doing this, or it's Tuesday, or whatever fuck it is that you think your rules are, and understanding entry analysis, you would be incorrect in my world, coming out of a life of a bachelor's degree in physics, almost a minor in math, 33 years as a software engineer, and I spent 40 years doing real estate investment and retired over $1 million net worth so that I could buy this house for cash before I sold my other house. So it's our investments and things and our knowledge of how to manipulate money and write the rules and all that other kind of stuff that gets you going. But the important thing is you have to understand how to get into the game. Because if you don't get into the game correctly, you're never going to make any traction. If you don't understand the basics of compounding, if you're going to be investing in S&P 500 or mutual fund or something like that, that's a long-term play with the tools that are available to you in those things. In currency trading, we have a tremendous number of tools more to accelerate that compounding and all that other kind of stuff. But I digress. If you don't understand the entry analysis, you're not going to get into the position so that you can maximize your gain. So you have to know how to create rules, and those rules have to support the solution of your entry analysis problem so that you can get in there and get that trade with a positive expectation that it's not going to stop out. Okay, that's the thing. And then the third part is executing the rules that you have, that entry analysis, that one rule that's entry analysis, and position management rule, and exit methodology rule. You have to understand how and when to execute those rules correctly against your valid metrics. Okay? Oh, Peter, that's just a bunch of shit. Well, okay. So this person was, we're working on this account that he has. I go, look, let's do an experiment. Let's drop your account to $1,000. Let's go back and drop your account to $1,000, and let's try this. So we tried it without me really going into a lot of the stuff that he was doing with the larger account, because sometimes that fucks with your brain and you're not able to see the forest for the trees, right? Or the trees for the forest. So we went back to a $1,000 level account, and I said, keep track of your metrics for the next few weeks, and then we'll get back together again and let's see how you did. So he got back and his metrics were pretty much what he was doing, and in fact they came out underwater. Instead of being like a 60-40 trader, he's a 40-60 trader. He wins 4 times for the 6 that he loses. So that isn't working out too good for him. So I said, look, we got to understand how to create the rules better than what you've gotten out of the teaching so far. There's a flaw in how you create the rules and what the problem is that you're trying to solve. And then we got to understand a little bit better some of the facets of implementing those entry conditions to the entry rule. We got to take a look at those. We got to analyze those a little bit better during this conference call. And then we got to learn how to apply the execution of those rules against some valid metrics. And a 40-60 upside down win-to-loss ratio is not exactly indicating that your metrics are valid. So let's make the assumption that you are a 60-40 trader, and what do we need to do in order to get to this solution to what your problem is? We spent about an hour and a half on the call. I said, okay, take the $1,000 now. and he had lost some money from it. So I said, well, reload it. So you got $1,000. Let's start over, and I'll talk with you again in a couple of weeks. Tell me what you do. Did. So he comes back to me, and all of a sudden now he's a 70-30 trader, going from an upside down 40-60 to now 70-30. And the net result of that was when he goes back to his low 5-figure account and he did the calculations, he was in the process of losing $20,000. He was going to gain in the trading that he was doing, as upside down as it was against his 5-figure account, probably about $5,000 for the year. So you're taking a $30,000 account, let's say, and you make $5,000, 5 divided by 30, and you know that's your win rate, or whatever it is that you're going to call it. But we're going to add $20,000 onto that. From the math, it says we should be able to add that on. Not only if you continue with the 70-30, because you could win 7 times $50, and you could lose 3 times with $300, and you'd be, pretty screwed. So let's see what's going on. Let's validate that you really understand what you're doing, as opposed to you just got statistically lucky and you ran 70-30 and it worked out. What I told you and how I worked with that on you isn't just a fluke. You just didn't run into a statistical anomaly and you went from upside down 40-60 to right side up 70-30. So let's run it out for another few weeks, which we did. And he came back. He's still 70-30 and definitely on track to make that additional about $1,500 a month from where he was. So if you're finding that in your trading, and my work is really geared for those folks that are in that 5-figure bank area. They're trying to replace their job income. They're not interested in trading a couple of mini lots or 5 mini lots at $5 a piece or something like that, $5 a pip. They're looking to, let's say they have a $40,000 a year income. Let's make 40% against that. Let's make $16,000 from the trading, or you're making $60,000 a year. Let's try to make $30,000 or $40,000 against that, depending on how your win to loss ratio, your average win, all the rest of the shit. But also knowing 3 simple things: know how to create rules, understand your entry analysis process correctly, and understand how to execute the rules correctly against valid metrics that you are capable of producing. It's as simple as that. And if you're a 5-figure trader, you're leaving about $20,000 on the table if you don't understand those 3 rules. If you're trading with less than 5 figures, you're trading 5 minis or whatever it is, then instead of $20,000, maybe you're leaving $700 or $900 on the table a year to maybe a couple of $1,000 a year on the table, and that's huge. And if that's all the money that you have is $1,000 or $2,000, and you could gain, you're making, let's say you make 40%, you're making $800 a year on your 2 minis. It'd be nice if you can make another $500 or $400 against that, because that's, if you're making $1,000 bucks a year on a mini, that $1,000 is almost your light bill. That could be life-changing. And it's also an additional $1,000 in your account, so now you can trade another mini, right? So there you have it. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.